automaker Stellantis says it has stopped work at its EV battery plant in Windsor, Ontario, because it says the Canadian government has not delivered on what was agreed to. The facility was unveiled about a year ago with roughly $1 billion in federal and provincial subsidies. Last month, the federal and provincial governments announced they would give around $13 billion in public subsidies to Volkswagen for a giant EV battery plant in St. Thomas, Ontario. Stellantis' Windsor plant is expected to employ around 2,500 workers when it opens next year. Windsor's Mayor Drew Dilkins told BNN Bloomberg, "The potential impact on our community is significant, with thousands of jobs at risk. Our collective focus remains steadfast on assisting to find a constructive solution for the benefit of our community." Well, to discuss what's behind the dispute and what EV battery plants mean to Canada's auto industry, joining us now is Flavio Volpe, president of the Automotive Parts Manufacturers Association. Flavio, thanks so much for making time today. We appreciate it.
Thanks for having me, Jacqueline.
So what has your reaction been to this sort of public spat that's developed between Stellantis and the federal government recently?
Well, I'm a little less worried than the mayor. What we're seeing is kind of a public peek into private negotiations, and none of what we're seeing is a surprise to me. You're getting down to the last strokes in a match here, and none of us should be surprised that Stellantis, that is accountable to its shareholders, is going to seek terms that are similar to what their competitors got, all in the States and then up the highway in St. Thomas.
Yeah, I guess that's a little bit unclear to me, Flavio, and I know you're not involved in the those conversations, but when they're saying that the federal government hasn't delivered what it's agreed to, that doesn't to me sound like it's asking for more, but that seems to be the conversation that's being had, is that Stellantis wants something similar to what Volkswagen had, and I guess it's sort of a natural jump, perhaps, because with Volkswagen getting these subsidies, it did raise the question, it has raised the question of whether other companies are going to demand something similar. Is that the sort of conversation that you're hearing among industry players, that they've set a precedent with Volkswagen?
Well, the precedent was the IRA, and so talking to all parties over the last few days and saying, look, when we landed this plant in Windsor in March of 2022, it was extraordinary, but also dropped some jaws in Washington. And when Washington rewrote Build Back Better Act into Inflation Reduction Act, they turned around and put this extraordinary industrial policy in place, this production credit for batteries that changed the game completely. So Stellantis and LG came early back to the federal government and said, look, I mean, we love what we did here, but if we did it in the United States, we wouldn't have to negotiate a tax credit. We just have to produce and demonstrate. And the difference is probably $1 billion a year in terms of operations. We're a publicly traded company. We're a competitive market-based company. We can't ignore that. We have a 95-year partnership with Canada. They've been in Windsor since 1928. And, we've had ups and downs, but it's been a strong relationship. In the interim, Canada has been negotiating with other companies, and they closed the deal with Volkswagen. Volkswagen is a reaction to the IRA. This renegotiation of Stellantis is, again, a reaction to the IRA, not so much Volkswagen. However, both levels of government, especially the federal government, and people like me have gone for the last 2 or 3 weeks defending and explaining the principles of the VW deal, and why it's still accretive to Canada, and why it's important to help trigger upstream investments as well. Those principles can't be true in St. Thomas and then not true in Windsor. And so I expect we're a couple of days away from finding the final details here and Stellantis resuming the construction of that plant.
So you're not concerned that this is, Stellantis trying to find another place to take its operations? I mean, they've already started building this plant.
Look, this plant is important. The timing of this plant sequentially is important. You build this plant to make 400,000 batteries a year, to put them in the 2025 model year into the vehicles that the U.S. government and the Canadian government have said must be electric. You don't waste a year building a plant and then say, I'm going to go tear it down and go start somewhere else because you're going to miss a model year. So the company is behind a rock, and the Prime Minister and his industry minister are in Korea over the next couple of days, probably meeting with the company's partner, LG. So there's the hard place. And so between the two, the one thing that everybody agrees on, the best place to do this is Windsor. And we're really just kind of grinding out the final details.
Flavio, just very quickly, if this does work out, as you're sort of laying out there, are there any other sort of longer term risks here? Because, these negotiations are kind of, they've gone public and, we're wanting to attract investment right now. This country is wanting to attract investment. Does it dissuade it potentially if, this sort of disagreement is making headlines?
Well, I listened to the language in the disagreement, and it's still all respectful.
Right.
Stellantis didn't say, if you don't do it, we'll get pulled out. They just said, look, we're going to pause construction. And then they turned around and said, well, the federal government hasn't lived up to its obligations. They're not saying they don't expect that to happen. They're probably just kind of pushing a little bit because the Prime Minister is probably going to meet their partner. This is a unique deal. It happened before the IRA. Every other negotiation that Canada has that's active, like the VW one that landed, is post-IRA. And so I don't expect this to be any more than some anxiety for the mayor of Windsor, at the head of that list for a few days. And you'll have me back on. We will be making batteries in Windsor for the cars that my members supply across this country.
Okay, we will have you back on, Flavio. Thanks so much for today, though. We appreciate it.
Canada is investing in hydrogen, so is Alberta, working on a giant hydrogen hub. So there is optimism about this material as possibly an energy transfer product, a way of storing energy. The Senate is out with a report, Canadian Senate, on the promise of hydrogen. And we're joined by Rosa Galvez. She was the chair of the group of senators who produced this report, also professor of environmental engineering at the Université Laval. Thank you very much indeed for joining us, Senator.
Thank you for having me.
Senator, I was looking at your report, and like any professional, you're somewhat guarded here. You say, for one thing, we have to look at hydrogen in the context of all measures for getting to net zero. So just talk to us briefly about that.
Yes, absolutely. We have to look at it in a system, and we have to look at it in terms of the energy mix. And we have to be, be ready that Canada is a vast nation with different resources, different provinces, and that we have to make sure that we are doing this in a coordinated fashion with the province's government and with all the resources that are available.
As you know, people in Alberta are excited about the prospect of producing hydrogen from natural gas, but capturing the carbon.
Yes.
Does that sound plausible to you? Could that work?
Well, that's the thing. What we want to do is reduce the greenhouse emissions. So in order to have a gray hydrogen, which comes from methane, from gas, natural gas, and have it reduce emission, it has to go towards capturing the carbon. And if for the local markets or for specific end usages, and when the transport is facilitated, then this is a viable option. In other provinces, like where I live in Quebec, you can have wind, solar, and hydro producing hydrogen from water, and then there is lower energy. But this one part of the nation is in the one ocean, and the other part is closer to the other ocean, and we have a big land in the middle that has oil resources.
I'm looking at a headline here in the Washington Post. Clean hydrogen could be a bigger boondoggle than biofuels. Now, one of the authors of that piece, a climate economist at Columbia Business School, he and his co-author are saying that biofuels in America have been a boondoggle, very expensive, not very effective. Are there risks here that taxpayers pour lots of money into hydrogen in subsidies for very dubious benefits?
Well, for sure, we have to distribute the risk. There is risk because this is new, even for Canada. It's new to think in hydrogen in terms of energy. And as I said, there is going to be some usages that will be very easily to evaluate. Like, for example, right now, the hydrogen is used in chemical feeds, in refineries, and that will be used. But now we're talking more in terms of energy. And so, for example, there is the industry of cement, of aluminum, or steel that may need to reduce their greenhouse gases by using this new hydrogen. So this is a new sort of application for that, and there is a risk. But I think that there is optimism that they can bring it down to a very acceptable economic level that will be interesting, economically attractive, and beneficial economically, technically, and environmentally.
You do say in the report, and we're getting a little off hydrogen here, though, that the carbon tax should be as broad as possible. And we have seen carve-outs for big industries, haven't we?
Well, you see, the carbon tax, by many experts around the world, is that polluter pays, and it's an effective tool in order to use the money to decarbonize the economy. Now, we know in Canada, we have given flexibility to provinces with respect to this carbon tax, and the money is going back to the provinces. And the provinces may choose to, use it to encourage and promote hydrogen or another renewable energy, but we cannot be having exceptions, because if we open the door for exceptions and make an exception for the carbon tax, then the purpose is lost. The other thing is that right now the carbon price is very low here in Canada, and you look around the world, it's much more expensive. So that the goal is not attained because of this low price that we have in the carbon taxes, and we need to increase it.
Senator, thank you very much indeed for joining us.
Well, it may not be in reach for the average Canadian, but did you know that Canada is one of Lamborghini's top 5 markets for supercars? The company is making a Canadian debut of its first V12 plug-in hybrid model, the Revoluto, here in Toronto. For more on supercar sales trends and how the automaker plans to electrify its fleet, we're joined by Andrea Baldi. He's CEO of Automotive Lamborghini America. Thank you very much for coming in.
Thank you for having me.
Tell us about this new car. This is a hybrid electric car.
It is an electrified vehicle,
okay.
And it's the first plug-in hybrid for Automotive Lamborghini, so it's a new chapter for a company that is celebrating its 60th anniversary. We were born in 1963 with a car with a V12 engine, and today we are getting into a new step, a very important milestone of our electrification with a naturally aspirated V12 engine, but also plug-in hybrid.
Does it come with a list price? Can you tell us how much it retails for?
So we're starting from 700,000 Canadian dollars shy, but because of the very wide opportunity of customization that we offer on this car, I predict that we will be always at least 100,000 above this price.
Okay. Lamborghini customers have indicated a demand for this type of vehicle, I assume.
Yes, we have been overwhelmed by requests. We have a big customer base of customers that have already had a V12 before, but we expect for this car to have at least 30% of newcomers, new people to the brand that will expand our customer base.
What are Lamborghini's thoughts on the charging infrastructure here in North America, and how does it compare to the charging infrastructure in Europe or in Italy?
So for this kind of car, we have the opportunity to always recharge the batteries thanks to the internal combustion engine. So it will be very unlikely that you have to recharge the car unless you live in a town or in a big city where there are regulations that forces you to keep the engine completely shut down until you are out of the city, which is not the case in Canada or in North America. So I would say that what we have created here is a car with an electric engine that helps performance and reduce emission but it's very rare that you're going to drive merely in electric modes.
Right. Important to remember that it's a hybrid and therefore does power itself through the braking process, correct?
It is recharging through the braking process, and it is also recharging thanks to the internal combustion engine. And so essentially it's very difficult that you run out of power electric.
Okay, so this is a first step by Lamborghini towards electrification, correct?
We have a strategy to reduce our emission and CO2 especially. We started back in 2015 when we first made carbon neutral our factory. But we have a plan, a very clear strategy that we call Core Tauri, following the name of a star, something that can give us a clear direction that has several milestones. The most important is by 2025, we will have reduced our CO2 emission by 50%. And the Revuelto is part of the strategy. And by the end of the decade, we will have a fully electric car in our product range.
Talk to us about Canada as a Lamborghini market. I think it would surprise a lot of people that we fit into the top 5, do we?
So to be completely accurate, is top 6 when it comes to super sport cars. So we are talking about the 2-seaters. Overall, if we look at the dimension of the market, including also our SUV in the world, Canada stands in any case in the top 10. And so it's a very important market, even though when it comes to volumes, we're always talking about small numbers when it comes to Lamborghini. Of course, we are a small car manufacturer, very exclusive, and not for every pocket.
Right.
Unfortunately.
But I think it would surprise a lot of Canadians because what we are obviously an advanced economy. We have affluent people here, but we have a small population compared to the United States, compared to the UK, compared to France, compared to Germany, compared to many other countries. What do you think explains Canada perhaps punching above its weight, if you want to use that phrase, in terms of elite vehicle sales?
So in general, in Canada, the premium and luxury segments are more developed than in other markets in proportion to the mainstream, to the volume brands. And what we have seen in many other brands is also happening for Lamborghini. There is clearly a preference for the top of the range. And I must say that, again, we have a strategy to try to give cars everywhere in the world to diversify. But for Canada, we have a huge order bank, so we are trying to catch up, and this is supporting the market to grow. We had a record last year, and we are going into another record this year.
Okay. Is the new vehicle available now in Canada?
We are presenting it for the first time to the customer today. Is it possible to order it? We expect the first deliveries by the end of the year, but we are barely starting to produce it. So it's going to take a little bit of patience. For some customers, even years.
Thank you very much for coming in.
Thank you for having me.
That's Andrea Baldi, CEO of Automobili Lamborghini America.
Well, we mentioned those Walmart results before the break. The retailer tends to outperform when the economy is weakening, in part because if people are looking for a good deal, Walmart specializes in that. But the company also has that massive grocery footprint, which brings people into the stores in the first place. And Walmart's been using that playbook in Canada as well, where it has now been operating for nearly 3 decades, has more than 400 locations across the country. Mark Cohen is the former CEO of Sears Canada, so he knows the Canadian market well. He's director of retail studies at Columbia University's Business School. Mark, nice to have you with us. What would you say generally about the business of Walmart and how it tends to perform in periods of uncertainty?
Well, first of all, the customer goes down market during periods of uncertainty, and that's an age-old manifestation of behavior. Walmart is, however, doing extraordinarily well relative to peers because of their foothold in grocery. Because what we're witnessing now is the age-old battle between customers' wants and customers' needs. And in this period of inflation, this period we haven't seen in decades, the customer is clearly moving toward needs rather than wants. And there's Walmart with certainly hyper-competitive prices, assortment, and stores everywhere customers might shop. So it was not surprising that they outdid expectations and their competition. They did say that their view of the balance of the year is expansive, whereas Target, on the other hand, at least in the U.S., offered some guarded view of what to expect in the second half. So it's COVID redux. I said in 2020 that assuming COVID didn't kill us all, that the medical crisis would pass. It would take years for the disruption that COVID brought to run itself out, and we're seeing that, and that's the inflation that we're seeing. So Walmart, big winner in this economy.
In Canada, I mentioned Walmart's been operating here for almost 3 decades. It's been more than 15 years since they started their grocery business here. And I remember the early headlines, I'm sure you do too, about what that would mean for the traditional players here like Loblaw, which in itself, in its locations, has increasingly gotten into the discretionary category too. So, you know, they know what the shopper might want to buy once they're in a grocery store. How would you say Walmart has done in this country on that front by comparison to, say, a Loblaw?
Well, Walmart has tremendous scale, and so they have economies that even a large organization like Loblaw struggles to match. You know, the grocery business is wonderful with regard to frequency and recency on the part of customers, but it's a low-margin business, and it's a business that carries with it substantial operating expenses. Walmart took the stance, as you said, about 15, 20 years ago to get into that business, and now they hold tremendous share. They are a force of nature with regard to competition. And of course, they're reaping the whirlwind as the customer is focused on commodities, consumables, necessities at the moment.
Now, what is it about, I mean, as big as Walmart is, we know there have been a lot of examples where retailers have struggled, U.S. retailers have struggled coming to the Canadian market. Last time you joined us, we talked about Nordstrom's exit. Obviously, Target's struggles in this country were well documented. What is that je ne sais quoi for a U.S. retailer that is trying to successfully operate in a country like Canada?
Well, as we've spoken earlier, Walmart is the exception rather than the rule. They came into Canada by buying Kmart Canada, which was basically a failing chain. They correctly invested heavily in real estate, not only in physical space, but location. And so they moved to a Walmart superstore format, in many cases on a different platform in the communities that they serve. They have been remarkably successful. And back in the day when I was in Canada, I would have to say that Walmart seemed to do a better job in presenting goods and servicing customers than their U.S. counterpart. Their stores were clean, neat, friendly, well-stocked. So from an execution point of view, whereas they have failed miserably in many places throughout the world, notably the UK, Germany, Argentina, Korea, Japan, they certainly got it right in Canada, and they continue to prosper on that basis.
Before we wrap things up, Mark, I can't talk about a player like Walmart operating in Canada without talking about Amazon and Walmart constantly doing battle in different ways, but there is certainly a lot of overlap there. And Amazon actually, interestingly, this week disclosing the taxes it pays in Canada for the first time. What does that suggest, just the size and scale of these U.S. operators that are growing in dominance in a country like Canada, that they would, potentially need to provide more information on how their business or their footprint here is? Is this PR strategy, in your opinion?
Well, look, the media would like to suggest that these two organizations are in a horse race, but in point of fact, they're on different racetracks. Walmart's tremendous advantage is its network of stores and its proximity to customers physically. Amazon's tremendous advantage is the literally hundreds and hundreds of millions of products that they offer that no one can compete with by way of access. So the two operate in in an element of competition, but they're really separate businesses unto themselves. As you know, Canada is an expensive place to do business, and so Walmart has long ago passed the point of seeing the benefit of scale, and Amazon as well, although they do pay a tremendous penalty by way of duties, transportation, and, as you said, taxation.
Okay, Mark, really helpful context. Good to see you as always. A breakdown of what's happening on the retail story on both sides of the border. That's Mark Cohen. He's former CEO of Sears Canada. He's also director of retail studies at Columbia Business School.
Well, we know that crypto has had a fine time in 2023, still well off of its previous highs, but has rallied significantly year to date. And this is tempting those that are crypto-based companies to start to go public. Remember IPOs? That was a big thing during the pandemic and certainly came off as the market was under significant pressure last year, but hasn't really returned in a major way, except in cryptos. We've seen a few of these IPOs come out recently, and perhaps the new rally that we are seeing in crypto prices could entice even more of them to come out, especially at a time where I think you're not going to get any institutional managers kind of post the FTX blow up feel like they can stick their neck out these days for any upstart crypto firm. So perhaps the private markets have dried up, and they're probably also spooked by what's going on in the regulatory environment. Even that so-called kind of blue chip Coinbase is dealing with regulatory issues and regulatory uncertainty. So there's that's part of it that could make the public markets kind of the best bet for any of these crypto firms that are looking to raise money. Let's bring in Matt Hogan. He's Chief Investment Officer at Bitwise Asset Management. A resurgence in crypto IPOs, are we already seeing it, or do you think it's going to be coming in relatively short order?
A great question. Thanks for having me here. We've seen a trickle of private crypto companies entering the public market, either through traditional IPOs or some actually finalizing the SPAC process. There's been some crypto miners, mining equipment manufacturers, and that's driven by the fact that, as you mentioned, crypto is having a great year, right? Bitcoin up more than 70%, crypto equities up almost 100% on average on a year-to-date basis. I think the flood will happen more towards the end of this year or early next year if crypto continues in this bull cycle. If you see Bitcoin up 100+% by the end of this year, you're going to see not just one or two, but 5, 10, or 20 companies trying to access the public market and find liquidity there.
And I was alluding to it, but maybe you could help flesh out the idea that public markets are kind of the best avenue right now for funding.
Yeah, I think it's a really important fact. If you look at the crypto VC environment right now, it's extremely healthy for early stage companies. There's a flourishing of new ideas at the seed and Series A round. But the growth stage capital market has dried up to a large degree. Part of that is the overhang from last year when a lot of crypto venture capital firms piled into FTX and other companies that ended up failing. And so they're feeling burned. So if you're a large-scale private crypto company looking for liquidity, the public markets may be more open than the private markets, and that's going to make the IPO environment more exciting, particularly as this bull market continues.
Okay, so we know with tech stocks, investor demands in the public market shifted dramatically. You cannot be growth at any price. You cannot be money losing. You need to show some discipline, and you need to show some profit. Is the same thing true for crypto? If you're a crypto company looking to go public this year versus, back when Bitcoin was above 50,000, do you have to demonstrate something different?
Yeah, absolutely. The sort of days of hopes and dreams in the crypto economy are over. Now you're talking about users, profits, and certainly robust revenues and robust growth. The other thing investors are looking for, and they're right to do this, is balance sheet health. One thing that happened in the last cycle, crypto companies that survived from 2018 to 2022 did spectacularly well. They strongly outperformed Bitcoin. But companies that had weak balance sheets failed, it means for many investors, you're going to be better off buying an ETF or a basket of crypto stocks than any individual company. And it means investors are going to have a strong focus on the strength of those balance sheets so that those companies can survive these very volatile markets, which is what crypto is.
Every time there's an IPO, I guess unless you go via SPAC route, but you have to provide a lengthy assessment of the risks. And I assume that regulatory risks will feature prominently, but how do you quantify it? Because it's not just they're uncertain because you don't know how definitive policies are going to apply. You don't know what the policies are and what the mood is of the regulators.
That's exactly right. There is a big regulatory overhang in the US, in Canada, and select other markets in crypto. And I think companies are going to be very specific about disclosing that. You know, I will say that in the Bitcoin mining space and mining equipment space, which two are the most popular areas for this pre-IPO market, that's in a relatively strong regulatory setting. But you have to be honest that there's regulatory risk. The thing investors should remember is you don't get spectacular returns without taking on risk, right? Again, crypto equities are ETF up 100% on a year-to-date basis. That's great, but there are these big regulatory risks, and you'll see extensive disclosure in any sort of prospectus documents that make investors realize that those are real, present, and not going away anytime soon.
All right, Matt, we're going to have to leave it there. Thanks so much for that perspective. That's Matt Hogan, Chief Investment Officer at Bitwise.